Back in November last year, I sold my first investment property, which I had held for over 4 years. In today's video, I'll walk you through why I decided to sell, and I'll also share with you a property investment decision-making spreadsheet I built. It helps me track, forecast, and review my investment performance. Whether you already own an investment property or are thinking about buying one, I believe this tool can help you make more informed decisions. As for how much profit I made from this deal, I'll break that down at the end of the video. So if you're interested, make sure to watch until the end. And let's get started. First, let's talk about the background. I bought this 2-bedroom apartment in mid-2020 for $465,000. It was the very first property I ever purchased in Australia. Right after that, the market began to climb, and by 2022, the property had peaked at around $655,000. But as interest rates started rising and other factors came into play, the price began to decline. By 2024, it had fallen to around $620,000. My gut feeling at the time was that prices had plateaued. Looking at the broader economy, I believed housing prices might rise mildly, maybe 2% to 4% at best, or even dip temporarily. In other words, from a capital gains perspective, I didn't see much upside, and the tail risk of a deeper drop seemed increasingly real. Now, let's take a look at the cash flow. This is where my investment spreadsheet comes in. I use it to log all income and expenses for each property and view year-by-year summaries right on the homepage. From this table, we could see the net profit for this property in financial year 2023 was $6,500, but the cash flow was negative $3,800. In financial year 2024, the net profit dropped to $4,000, and cash flow deteriorated further to negative $4,400. In short, the holding costs were going up. Continuing to hold this property would only drag down the overall performance of my portfolio. Finally, there's the opportunity cost. After paying off the mortgage, I had about $200,000 equity in this property. That's a significant amount of capital. I could easily invest it elsewhere in something more liquid and potentially higher yielding, like ETFs. Compared to other opportunities, continuing to hold this property just didn't seem worth it anymore. So after looking at capital growth, cash flow, and opportunity cost, I came to the conclusion it was time to sell. And 1 year later, I still think that was the right call. As someone working in the industry, I can clearly feel that investors are pulling back. Most of the buyers in today's market are owner-occupiers. That's largely because the holding cost of property in Australia is rising. The council rates are going up, and starting 2024, the Victorian government introduced the COVID debt levy, which is effectively a temporary increase in land tax. Meanwhile, rental growth is slowing down. That makes it nearly impossible for investors to find positively geared properties. When that happens, the entire return structure becomes unbalanced, which means that property investment is becoming increasingly reliant on capital gains. That puts a lot more pressure on investors to time the market well and choose the right property. The margin for error is shrinking, and the overall risk-reward profile is getting less attractive. That's why I believe most ordinary investors are better off not entering the property market at this stage. What do you think? Will the Australian housing market rise or fall in the next few years? Let me know in the comments. Now, back to the property I sold. Let's take a look at the final return. I sold it for $620,000. My original purchase price was $465,000, which means a gross profit of $155,000. But of course, we have to deduct buying, selling, and holding costs. The purchase expenses, including stamp duty and legal fees, came to $10,938.6. The selling costs, including legal, marketing, and agent fees and so on, totaled $20,958.74. After subtracting these, my net profit came to $123,102.66. Over the 4+ years I held the property, the total holding cost was $392.05. This property should have been positively geared, but since we lived in it for the first 2 years before turning it into an investment, the final holding return was actually negative. So in the end, this property brought me a net profit of $122,710.61. My total capital invested, including the deposit payment and principal repayments, was $129,701.39. That means the return on investment was 94.61%. Over 4 years, That works out to an annualized return of 22.18%. I'm personally very happy with that result. If you have questions about the selling process, feel free to leave them in the comments. I made a follow-up video sharing tips on selling property. Okay, that's it for today's video. If you enjoyed this content, don't forget to like and subscribe. I'll see you in the next one.